Finally got what I've been waiting for, Michael Burry's 13F filing of Q4. He did do a lot of things, but my personal favorite pick is his second one, which is his Fidelity National Financial. I'm gonna talk a little bit more about the stock. But when I first looked at Michael Burry's portfolio on the things he sold, the things he owned, like Bristol Myers, like, Fidelity, like, General Dynamics, like, GEO, Core Civic, all these kind of stocks, I could tell that Michael Burry is still feeling that the sell-off in the stock market is not over. He's not really finding much value. Now, he was looking at value internationally. He did own a lot of Japanese stocks and stuff like that. But based on this filing, I cannot really tell if he still owns them or not because it hasn't been updated yet, but I will keep you guys updated on it. But I don't really blame Michael Burry for feeling the US stock market is still a bit overvalued. I mean, if you just look at the S&P 500 PE ratio, we are 2 standard deviation above historical average. The last time we were that high, it was in the dot-com bubble, and that's as February 11. So despite all the sell-off, especially in the Nasdaq and the ARK ETFs and stuff, the S&P 500 still has a long ways to go down. This is me basically judging off of Michael Burry's portfolio because he normally owns some big tech stock. He owned Google in the past, he owned Facebook, but now he owns none of that stuff. So he's likely a little bit fearful. So let's get started. The first two he sold 100% of were DNOW and Lockheed Martin. And there was a lot of jokes that Michael Burry somewhat knew that Russia is going to attack Ukraine or whatever, and then Lockheed Martin is going to rally. Now, I don't think he really knew. Maybe he guessed it, but the stock was underpriced after kind of fear that the US government is going to cut spending on those kind of stocks and stuff, and they're going to get less revenue. And I came up with my video and this is not true. They have 2 years of backlog, Lockheed Martin, and now even is still a good stock at a forward P of 14 or just a basic P of 17. But he sold those two and he made pretty good money on them. The other two he sold were a healthcare stock and then CVS. CVS, he made a pretty good killing on it. I believe his average cost was like 75 and the stock went to like 110, 115. But the problem with Michael Burry, he's just always so early. Like imagine if he had kept his ARK innovation puts. How much would they be worth right now? Whereas his TLT puts or all those puts that he actually sold, he's just always too early, and that's why most people kind of misunderstand him. The other two stocks he always buy and sell from are Core Civic and GEO. And I don't know much about Core Civic, but they are both the same business model. They are actually they own like private prisons and stuff, and they lease them to the US government, to the ICE, to a lot of those agencies. And there was a lot of hate lately kind of around private prisons and stuff. Although GEO is not really in private prisons, it works more into rehabilitation of people. And I did the analysis on it a long time ago, but essentially the whole deal with GEO, they have a lot of debt, right? But they have a lot of free cash flow, and as long as they can be rolling out that debt and they can continue selling their prisons, I mean, the stock has a lot of potential later. But now GEO is trading under book value. Book value on paper, on their paper, is around $8 a share. Now the stock is $6.52. But I did do a deeper analysis and I dug into the numbers in my video, which you could check out. I looked at their 10K, and then I looked at how much were the prisons valued, and then I looked at how much they sold those prisons. They were like 20 to 25% more. So their book value is more around $10 to $11 a share. But nonetheless, it's a pretty risky investment. It's at a P of 5. But that really tells you that Michael Burry is not really finding much value in the United States or in the stock market. Another one which he actually bought is IMPX. Now, if you want to buy the stock, I believe it's a little bit too late. IMPX was a kind of a SPAC backed by Harley Davidson, and the stock, I mean, went down pretty much under NAV. The floor for those SPACs is usually $10. It went down to the $9 range, $9.75. I felt Michael Burry kind of felt it's a good asymmetrical return to buy it under SPAC value, which was around $10. And then the stock shot up at one time to around $10.18, and now trading back under 10. But I believe Michael Burry sold. He maybe made 20 to 30% profit, which is really not bad at all with a stock like IMPX. His third biggest position is actually GD, General Dynamics. Many of you are familiar with it. It's actually a government contractor, and it had a pretty good performance over the past year. Now, I don't really know if Michael Burry kept it or sold it. If he did buy it maybe in late September or even here around the 189. Now it's sitting at 212. So he did make pretty good money if he did actually sell it. But the main reason Michael Burry, I believe, bought the stock, it's kind of a recession-proof type stock if Michael Burry is expecting a recession or some kind of pullback in the market. Why? Because it has a pretty long backlog of 88 billion, up 8.1% from a year ago. Same with Lockheed Martin, which is a stock I own. Lockheed Martin has 2 years of backlog, which has pretty much guaranteed revenue. And not only that, US President Biden also signed a contract to increase this defense bill to 770 billion. Now that's around 4 to 5% more than the previous year, which is also bullish for those stocks. But now I can finally get to my second position, which is the favorite one, is Fidelity National Financial. This is the stock. It has been dropping down off a cliff around $55 for no kind of justification whatsoever. Now Fidelity National Financial, okay, it kind of does three things mainly. The first one is in the title insurance business. It kind of provides titles and stuff, so it's really needed in time of real estate transaction. If you want to buy a house, sell a house, it does kind of origination. It helps out with the closing, with escrow, all that kind of stuff. Fidelity does it. But there's something else that Fidelity does, and it's mortgage refinancing. And now we are in epic fear in terms of rate hikes from the Fed and interest rates rising in general. So people are gonna go panic, kind of trying to go and refinance at the lowest rate possible before interest rates skyrocket, whether they do skyrocket or not. But this is the fear the public have, and they are rushing to agencies like Fidelity National Financials, which has around 32.7% market share in this type of industry, to kind of refinance their loans on their homes before it's too late and interest rates go up. It's like a panic sell, which gonna help Fidelity. Something else Fidelity National Financial also does, it provides annuities. And if you're not familiar with annuities, they actually perform better than bonds in those times of higher interest rates. So what Burry is basically betting on is people are gonna try to rush and get out of bonds as become more and more worthless. If they don't want to go into overpriced stocks, they may want to go get into annuities, which Fidelity National Financial's accuracy provides. And this is pretty genius. And this is kind of a quick look. They said when interest rates rise, the value of bonds decline. Because annuities aren't priced daily in an open market as are bonds, they are much better than bonds at holding and carrying their value. They also generate a more predictable cash flow, and some annuities also go up and down actually with the interest rates. So you're not getting clobbered as people kind of get rush and get out of the bond market. They may jump into annuities based on Michael Burry's perspective. And the stock is not really expensive at all. It's trading at a PE of 5, a forward PE of like 4.9 with a 3.7% dividend. You may not find that much kind of stock, especially in the United States and stuff. So, and Michael Burry is a value investor, so this actually perfectly fits Michael Burry's portfolio. And this is a stock personally I'm gonna look more into and maybe do a full analysis on the stock. Now the last one he actually bought, his biggest position was Bristol Myers Squibb, BMY. The main reason the stock went down in the first place was it has a lot of issues, but first of all it really was in terms of the drug that is expiring. It had some drugs expiring, just like you remember AbbVie and Humira, they had their Humira drug expiring. But these kind of pharmaceutical companies, they have other type of drugs that can have even more success than the one that's expiring, but always the markets kind of sells the stock a lot whenever there's a drug expiring in those type of companies. But essentially the stock did recover. I'm not sure if Michael Burry sold or not, but he did pretty nice gains, especially if he bought in the bottom around the $54 range. But essentially this stock is also recession proof, like Michael Burry is trying to get, like I'm personally trying to get. It has massive cash flow. It's a need-based type business. But essentially, I believe Michael Burry is still bearish on the market. He is, of course, I'm 100% sure he's holding some cash, but maybe not in cash, maybe in something that holds him interest and stuff, as he's not a person that really likes losing money to inflation and other type of things. But this was my thoughts on him. I was kind of upset because he didn't go back in discovery, and he didn't even buy Viacom CBS with these two stocks. Are pretty kind of deep value investor type stocks, but he didn't buy in, but that's Michael Burry, we always understand him whenever it's too late because he's always so early on everything. If you enjoyed this type of video, please press like and maybe consider subscribing. I hope to see you in another one.